All right, so let me say hello and welcome to another weekly edition of Stock Market Mutterings. Doug here with the LincolnList.com. This is for the week that begins on the 16th. Hope you guys are doing well. As always, you know what I'm going to do, right? You know what I'm going to do? I'm going to take a grope in that murkiness. That's right. I'm going down in there. And I'm going to try to find some value for you. It's a quality trade setups I'm going to try to find. And I hope it puts a little bit of money in your pocket. Now, for you guys that need some help with your trading, as always, I'm going to post a link right there on the top of the screen. Feel free to follow it and start trading with us live. So I'll begin with the SPY, but like I said last week, why am I even talking about this thing anymore? Why do I even talk about this? Because it just goes up. Whatever, it just finds a way to go up. When it goes down, what happens? Well, you get a tweet. You get a tweet, right? You get a tweet. And I didn't just kind of realize, but I just want to say it now. I've kind of hinted before, but you probably already know this. This whole trade war, it's like P.T. Barnum circus, isn't it? It's like it's a sleight of hand. It's a total trick, right? Because here's how it is. It starts out with a trade deal. Like it was going on for this one. It's a deal. A deal. This is what we want. This is what you want. We will meet. We will come to a compromise. That's a deal. We shake on it and we sign it and it's done. Isn't that a deal? Is that how you guys understand what a deal is? That's the deal that was supposed to happen in October, you know. And before that, it was constant pumping. China wants to make a deal. China wants to make a deal. Of course, they want to make a freaking deal, but they're not stupid. They're not just going to make any damn deal. They want to make a good deal, but, you know, they're not going to sit here and bend over backwards, but they kept using that as a tool to pump. Anyway, it was supposed to be that way in October. Then October, we're all surprised with this new lingo, which is called Phase 1. So today we end up talking about, okay, Phase 1 is done. Or is it? Because it's supposed to be signed, but it is signed, but we don't get to see it. So is it really signed? And then we can move on to Phase 2. Well, what is Phase 2? Since nobody knows what is Phase 2. It always seems to involve China buying agricultural products. How much product is China buying? So they're kind of saying that they're going to buy product, but not as a specified time. So what does that really mean? You're going to buy it, but not at a specified time. So if the IRS were to call me and say, hey, look, you got to pay your taxes. I'd say, I will pay you, but I don't have a specified time. Do you think they're going to put up with that shit? I mean, really, right? But the algos keep eating. It's definitely algos because human beings wouldn't be that, we can be dumb, but we're not going to be dumb that long and fall for the same trick 752 times. They got to teach these robots some stuff. So here's my philosophy and theory on all this now, which it's been that way. I'm just publicly speaking it. It is a circus. It's a sleight of hand trick. Because if you can confuse people, this is like from like the art of war and mastery courses about manipulation. If you can trick people and you can fool them, they won't know. So like, here's what I mean. If you just continue to use this lingo about a deal, if nobody knew what the deal was in the first place, right? Like I was saying on Twitter today, the greatest deal of all time can be the greatest deal of all time if nobody knew what the first deal was in the first place, right? It's always the greatest deal because nobody even knows in the first place what Phase 1 is. Nobody knows what Phase 2 is. You can't even see the document. How do you know? How do you know if it's a good deal? You don't. And if you don't know, then it's a good deal, right? This is like childhood stuff. It's like stuff I was telling my parents when I was 11. Man, tell you, it's crazy. It's crazy, especially the last 2 days because you've been getting massive moves. And it's like sometimes you get on the wrong side of that stuff. So guys, you got to protect yourself. If you're doing something, got to use stops because sometimes, man, a tweet can ruin your month quickly. And that's the kind of environment we are. Will it ever end? Jeez, I don't know. Because if we have do we have a deal now? I don't know because we really don't have a deal. Maybe we have a Phase 1, a Phase 2. You get Phase 2 to Phase 3. Do we even know how many phases there are? Will we be on Phase 25? There's not even like a plan or a structure that says we only have 3 phases. That's all we're going to do. Or 5 phases. We're just infinite phases, infinite agricultural products, infinite tariffs, and then you just throw these numbers out. I'm going to slap them with 25%. I'm going to slap them with 80%. I'm going to slap them with what percent of what? On who? On where? What products? You see what I'm saying? It's crazy. It's crazy. Man. Anyway, why don't we talk stocks? I did my rant there, right? I did my rant. So, I want to try to dig in here in the dirt, try to find you some value, some stuff I think looks pretty good, regardless of market conditions. I don't think we've ever talked about DOCU. D-O-C-U. DOCU. I like this daily chart. Take a look at this. It's got a pretty good earn. This is kind of a nice setup when it comes to earnings. When you get this big strong gap and it holds most of that gap or kind of pulls back after its earnings bases and then starts to re-gear back over the earnings high. You have a very good look like that. Looks like where it sits today and the performance that it had today, that this thing wants to trade back to the 75, 77s and then on. Now for you high volatile day traders, this is probably something that might work a little bit better when it comes to a swing. We're going to talk about some other stocks here in a second that I think are better when it comes to high volatility, and intraday day trading will give you a little bit more range. But there still is some range in here to play with, and there's still a pretty good and a consistent, well-behaved stock. So keep it up there. I think you're going to see that 75, 77, barring any unforeseen circumstances in the market, like a phase -2 deal. And then you might see an 80 run, but I think it's going to take a little bit of time. Now, one here that does have some pretty good range is this ADSK. Now, I already have a position in this. I've been in this here for a couple of days. So I like this. I would like it more over 180, honestly. I think it's a good confirmation spot. You had a re-gear after its earnings, and it got right up there to the double top, and that's where it got rejected. It looked like it was going to break out. Normally when we've seen stocks like that, like Lulu or Apple, got up there in those highs, they just blitzed right through them. This one actually rejected, fell slightly below the 10 moving average, and comes right back up. Now, it needs to clear 180 to 180.50 for it to confirm. So just because I own it doesn't mean that's going to do that. But if you get that close, I would think this thing goes back up to the highs, which is that double top, at least 180, 180. So it should at least trade at 180, 180. And maybe if it pushes through there, you could get a good parabolic day, a $6, $7 day, very similar to what we saw on Friday in NVIDIA. A really strong move out of that one. So I'm just going to put that one. I'll give you another slow mover here. Probably a little bit more of a swing trade than a day trade, in my opinion. McDonald's, the Mickey D's. I'm going old school. I'm going Mickey D's. I'm going DOCU. I should rather have some Starbucks. Maybe I'll get to a railroad here in a minute. Who knows? Nice chart. This thing's been consolidating for a really, really long time, for about 2 months. It's just been sitting here sideways, starting to crest up there. Looks like it's got a date here with the 200-day moving average, which is like 202. Again, there is some intraday value. You see on Thursday, you pop 195 to 197. There's money to be made there, and you got to fade, depending on the size that you're using. So there's some good back and forth action. But if you're trading on lower sizes, it's probably something that you want to stretch out a little bit more, but it looks like it's going to reclaim 200 here real soon, barring any trade deals. And then who knows? Who knows where after? I like the daily chart setup here, and I think you eventually get your way back to the 200-day moving average. Spot here is another one. It's got a pretty good daily setup. Spot. It's been consolidating, has pretty much a triple top here going back to the beginning of November. So I think if you can clear through this 149 level, again, another one that should reconnect with the higher area of 154s and trade back to its high. So you got a couple there with DOCU, with ADSK, MCD, and Spot. All trades here that have pulled back from their highs and look to be re-gearing back to those or breaking range on a daily. So you've got sort of like a multiple time frame breakout. And they're stocks that have some room to run if they do. They're not already overbought or have gone up $25 last week or $50. So they have some space in them. Now this last one is a little different story. Save the best for last, right? Tesla. Now this was my top stock of last week when I talked about breaking the range. And this is kind of how I see these things going. So for some of you that might be watching for the first time, some of you may not understand the strategy that I'm using here or what I'm talking about. It's these range breaks. So you see like it pulls back from highs. Rather than chasing stuff at highs, what a trader wants to look for is value, right? So you get a pullback, it goes sideways for pretty much a month, and it just starts to break. It breaks that moving average right here, and it breaks the top of this short-term range. And then when it does that, it immediately moves from 345 to 365. So it makes this $20 move instantly while it was haggling for a whole month. So if you're trading inside of that consolidation, you don't know what you're getting, right? It could go up, it could go down, and you're getting smacked back and forth. If you look for those multiple range breakouts, you're getting two of those, 2 for 1 right here. And that's what you had here, and you got a really, really big move. Now, the reason I brought it back up here is there's always a trade on Tesla. If you're a day trader, there's always a trade on Tesla every single day of the week. If you got stuck watching one thing, just watch Tesla. It does something every day. Just look at the maddening range in this thing. Yes, I don't know if it's not the best setup. I don't really like double tops. I like triples better than I like them doubles. But if you get back up over this damn, Jesus, it ran right up to the resistance. You get back up over this 364. Look out. And these things up like 100% since the summer. I mean, it's on fire right now. And I didn't mean that. That just came out. I really meant that. No pun intended, right? No pun intended. It is on fire. But watch it. I mean, geez. What do you think? 375? Maybe 4 hundos before the year's over, guys? That's a stretch, but hey, it's Tesla. It's Tesla. And who's a better stock? I mean, like, who's the second best? Best stock pumper in the world, we know. Who's the second best? Is Musk, right? Imagine if he was president. Boy, he'd be... Anyway, enough of my rant, huh? Throwing him out there today. Yeah, got a little edge on me. I'm snarky. Anyway, guys, I want to thank you for watching this week's edition of Market Mutterings. Trade well. As always, if you need my help, feel free to reach out to me at support@thelincolnlist.com. Trade them well. Until next week.